Hi there, it's Daniel. I commercialise intellectual property. I work with inventors to make sure they can get their projects from an idea all the way through to an exit point payday so they can earn money from it. I wrote the book Billion Dollar Napkin, which gives people a step-by-step guide on how to take their projects and turn them into money. Today, I want to talk about just one little thing, and that's why most inventors are not able to raise money when they go and do a pitch for funding. Now, there's a lot of reasons, but I want to just give you some core reasons, because if this is you and you want to change the way your outcomes, then I wanted to show you what you need to stop doing and what you need to start changing in order to get a better outcome. Now, first is the focus on return on investment. Most accountants and solicitors will tell you, high net worth individuals, they tell you firstly the who, which is go after people who can afford to invest. And then they say what you need to pitch, the what, which is all about return on investment. Both of those are wrong. And I'm going to show you why. Now, prospects generally are people with money, and there's no escaping that. You do need people who can afford it, but you also need those people, by definition, chances are they earn their money the hard way. They understand risks. They understand they have advisors around them. Those advisors would give them counsel on what to invest in, and they're not going to be very helpful for you, let me tell you. Now, their questions, it's very easy for an advisor around, and there'll be many, there'll be financial planners, financial controllers, you name it, they're all in there, accountants, solicitors, they're all giving advice to the high net worth individual prospect who you're trying to pitch to. And although that prospect might say to you, I love this project and I want to go ahead with it, within a few weeks, they're going to ring you and say, yeah, nah, changed my mind. And the reason why is because I don't want to give you a reason, but good luck with the project. And the real reason is they've been talked out of it by these advisors. And the advisors don't want to lose control of this money, because if you're asking for, let's say, $1 million, and their question is, okay, $1 million is fine, but who wanted to take a million of their hard-earned dollars and invest them in an unknown project with someone they've only just met, usually on for an uncertain amount of time, with a high risk return if it comes to that. And it's very easy for them to work on this and convince the investor that they shouldn't go ahead. And that generally happens within the due diligence period, and you lose the project, and you generally won't find out why. Now, I can tell you that conventional capital raising, as told to you by accountants and solicitors using AA round funding or the likes, with a whole lot of high net worth individuals and trying to get you a public listed company, works with big projects. It won't work with small ones. Now, you have to rethink the way you present your project, particularly if you don't have cash flow. If you have cash flow, then they're going to value you based on the net present value of future earnings, or they're going to do it based on historical earnings, which is an absolute awful thing if that were the case. But what I need to do is switch you away from all of that and get you to a point where you can do a completely different pitch to people. And I use a 12-point pitch, and I'm going to share the main 5 ingredients to that 12-point pitch for you, so you can change the way you pitch and get a better result every time. The first one is, I don't talk about the team and the product, the widget. I talk about the commercial model. Commercial model is 4 elements of a commercial model. One is what it does for the people. Who has the demand? What problem does it solve? Who has the problem? How do they solve the problem right now? Who do they go to solve the problem? That tells you where they're going to buy it from. How much they pay to solve the problem, how much it costs them if they choose not to solve the problem, because some people may choose to live with it. That's the case with some medical products, where people just say, look, I couldn't afford the operation, so I'm going to stay with what I've got and limp around for the rest of my life. That does happen. So the commercial model has that aspect of demand. It also has the pricing and costing, which you understand. It has external issues, like, for instance, political, legal, regulatory issues that will impact on you, but you can't control. You've got to be able to justify those. It talks about risk. So once you've got all these components put into there, you then have a very good picture of what the project's going to be for you and for them. But the most important part of that is exit, and I'm going to explain what that is. Next, after I've done the commercial model, I talk about the offer. The offer is going to be what I'm going to give to you, what you're going to give to me, how I'm going to make sure that you're looked after, and when you're going to join me and when you're going to exit. So you're going to have options to exit. You may not choose to activate those, but those are called value realization points, and they're important for any investor to understand what they are. Next, I want to talk about leverages. When I pitch a project, I would normally only pick somebody from the industry or the market because A, they've got a high knowledge, and that means less risk. But secondly, or B, they'll be bringing you their list of customers. So if you are selling fries and they've got burgers, chances are the people buying burgers will want to buy fries as well. Easy put together. So they may just take your project and write to 10,000 customers and say, we've got this now, it's got our brand on it, we do this, we do that, and would you like to order one or four, or I want to send you one out on 30 days trial? Done. And that's how you get instant sales, because it means no marketing expenses. They've already got the first 10,000 customers for you. So all those sort of leverages, including things like offsetting with grants, 50-50, for every dollar you put in, a government grant will come in, and there's a lot of others as well. Then I talk about the risks. Risks, they will understand the risks. They're coming from the industry or the market, and you need to understand that they know the risks, and you need to articulate those risks to them and how you intend to mitigate those risks. So then they understand, this guy understands his business, he knows what he's talking about, it's going to work. I feel confident that he's going to do this right. So risks is a very important thing to give back to them, so they understand that you understand what the risks are for them. And then finally, I talk about the exit. The exit is very important, because although you may not want to get out of this, they are not married into it. They are here for a period. They are coming in at a certain point, and they need an option to get out at another point. And in between that, things are going to happen, which they can control, you can control. But most importantly, when the time comes, they can cash out and go. Now, we call this a value realization point for a very good reason. They may not choose to exit, but at least they have the option to exit. And that's something you need as well, whether you like it or not. If you don't have an exit planned that you can implement at a certain point when you reach certain key performance indicators, then chances are all you've done is build yourself a job. And that's not a healthy thing at all. Now, if I go from there, I can tell you that 6 years ago, I changed the way I did this. I used to do the old way, and I changed it based on my new model, which is called the Cornerstone Investor Model. It works extremely well. Now, I've published it in this book, and you can buy that book on Amazon or wherever you like. You can order it from me if you like. You can get a copy of my Cornerstone Investor Model free now, and I'm going to give you an opportunity to go to a particular website, which you'll see below. You can get that. It's www.kickstart.plus. Kickstart is one word, .plus. If you go to there, it'll give you an option to download the free ebook, and it'll describe to you exactly how the history of the Cornerstone Investor Model, how it works, and how you should use it in order to get your funding in 4 presentations or less, not 300 presentations for 50 investors with $10,000 each, which would just be such a pain to manage. Okay, thank you for that. Get your free copy, and if you want some more information, come back to us and link through, and I give out information every day.